Hi everyone, I'm James. Let's quickly look at the markets this morning on this Thursday after hearing from the Fed. No interest rate hike or no interest rate cut. And I thought Jerome Powell was pretty sort of neutral in his tone. The markets didn't really like it, but we'll have a look at what happened. Let's have a look at the dollar first. And as the dollar moved up sharply, that affected everything else, of course. And the dollar is wont to go up in times of war and uncertainty. It's a bit of a safe haven. And you can see this move yesterday, moving up sharply, starting actually before the FOMC, not achieving a new high yet, but certainly a very bullish bounce, and we'll see what happens today. The PPI, Producer Price Index, yesterday came in pretty hot, and that combined with a fairly neutral stance by, sort of response by Jerome Powell, seemed to spook the markets. When we go across to stocks, it doesn't look good, I have to say. Although we haven't broken down through this invalidation zone, and what I've called a bull flag, it's looking pretty precarious. And now, respecting the top of this very messy descending triangle, it's not well defined. We're right at the bottom now, looking to break down. As you'll know, I've had two paths on this chart for quite a long time, one going down, one going up. So far, I've chosen the up path leading up to 30,000. But I fear now that we may have to follow the down path, and that could take us down to this next blob, the lower 200 period Bollinger Band, and the point of control, well, the next point of control on this chart. So either one of the two. If we don't bounce out today, it looks like we're going down, but there are going to be a lot of false starts and moves because of this war that's going on as the news changes and ebbs and wanes in favor or against the favor of the US. This is the S&P, very similar story. I've got an invalidation zone just below here. It looks like we're heading towards it. We're resting on and slightly below the 200-day moving average, this purple line. And there's a long trend line that's coming up with a little spike down below with a Zweig breadth thrust out of there. But that trend line is still valid, and we may have to get to it. And we may even have to get down to the double top breakout, which performed this Zweig breadth thrust. Take note of that level. It could be a pretty dire scenario, and maybe worst case scenario at 6136, unless we have a recession, of course. And if we are going down to that double top breakout area on the S&P, we might have to do that on the NASDAQ too. And that's all the way down here at 22,000, and I've got a blob there too. That's where the 200 period Bollinger Band is and the point of control. So all looking quite precarious, but there is still a chance we could bounce out on all of these. So we talked about the dollar and stocks, Bitcoin drooping down. It's best looked at on the day chart. I haven't given up hope on this yet, and I still think this is looking okay. I'm not going to talk much about Bitcoin today, just to say we're resting on the confidence of the 20 and the 50 period moving averages and trying to bounce out of here. And I think we've got a pretty good chance. There's a 618 fib that we've just about reached at the moment, just below at 69,240, and we got to within a hair's breadth of that. If we carry on moving down, it looks like we might not, but if we do, I'll hedge some of my Bitcoin and see how low we can get. On gold and silver, I'm now long on gold, but and you might be surprised by that if you're not following me in the private group, but we switched direction, having taken profit on the shorts. We've now gone long. So we have three very small long positions up here. The price is moving down. And if we don't bounce out now in this 4-hour candle, which has got about 3 hours to go before it rolls over, I will hedge the entire lot and expect to move down to the next levels, potentially even down to about 4,500 or 600. And maybe with a bit of momentum downwards, we could get all the way down to this breakout triangle and that blue line and the Fibonacci extension level. So let's see how we go. I'm still favoring the long side, but I don't know how deep this correction can be. Keeping a close eye on that, and as I said, I will hedge if this candle does not perform a reversal within the next 3 hours. Simple as that. That means I'll get some short positions on, and we'll take profit on the shorts at the bottom, wherever that might be, and then swing back to the long side. On silver, I'm still fully hedged. This is the 4-hour chart. This is the day chart. Looks like it moving down, and that's my projection. We've now broken the 100 period moving average and that support level, and it looks like we've got a good chance of getting down to the 200 period moving average, this point of control, and the ascending triangle breakout over there. Really important level, and I think we've got a good chance of getting there. At that point, I'll look to exit my short positions and shore up the long side and try and get long out of that bounce. I'll be looking for a very clear reversal pattern before I consider that, and I'll also be looking for the RSI down at the bottom here to get into a pretty oversold sort of situation. We might be trading gold and silver in similar directions at the same time sometime soon, and we've been in opposite directions recently. Nothing on platinum, and on copper, I'm now fully hedged. I haven't put that position up yet. Now, going across to oil and natural gas, I'm still long on natural gas. I took some size off at break even at the top here, reducing size down to about 20%. So it's quite small, and I don't know what's going to happen next. I do think, though, that a lot of this is influenced by the war in Iran, the Straits of Hormuz, and that because oil and gas are moving sort of together in a correlated fashion because of the war, at some point they will diverge. Quite often they move in opposite directions with a negative correlation. Right now we have a positive correlation. So if oil starts moving down, natural gas could move down as well because of the Straits and the influence there. We're also still in shoulder season, and there's no real inclination that there's a great deal of bullish underswell in the weather patterns. So anyway, we've reduced size, still long, so just being a little cautious, but not adjusting the direction or the targets. The target is 375, the bottom of this weekend rollover gap, and with a bit of luck we could get to 425, the top of the gap. In general, that's my idea. There are some nuances within that, but I don't have the time to go through all of that now. But we can talk about WTI oil. Notice that we're trading under $96 on WTI oil, but over 110, well, shortly a while ago, on Brent crude. Ouch, Europe, I put up on X this morning. So, a little bit cheaper in the US, quite a lot, actually, 15%. But what's going to happen next? I'm still short. You can see my cluster of shorts there. And really, it's all in the hands of the Iranians and the Americans, not the allies, because there aren't any allies. So it's the Americans versus the Iranians and the Straits of Hormuz and Karg Island and the missile war. And that's what's driving this price direction. I think overall, once this settles, we'll see a very sharp drop in the price of oil, and perhaps even lower than when this war started. It's just that the timing of it is impossible to pick right now. We've seen Brent crude oil going up to new sort of highs over the last day or two. There it is in the middle of the screen, whereas WTI has not. Of course, the US produces most of its own oil and gas and so on, and so the price is not as affected. And as the US is a net exporter of energy, there's more demand for US oil and gas, which of course pushes the price up stateside as well. So it's not all hunky-dory. So that's it. I'm still short on WTI oil, and I'm still long on natural gas, and I'm still long on uranium and lithium. And then finally on this page, I don't really have much to add except for the VIX sort of holding there, bouncing off this level. And really, if we do have a market crash, the VIX is going to go up and keep moving up. But whether it can or not after that big spike high, and what's going to happen this week, and it's all about the Straits of Hormuz. Have a great trading day, folks. I hope you enjoyed the video. It's very quick and short, but I just wanted to give you a quick update so you're not in the dark. And if you do like this content and you found benefit from it, please help us out with a like and consider subscribing to the channel. And also click on the link below if you'd like to get 14 free days in our private group, and you get to see every single trade that I take and talk to me all day long if you choose to do so. Speak to you soon. Take care.
Up at 6, charts on the table, cold tea ring on my trade log pad. Blue line climbing, red line shaking, every little candle driving me mad. They call it the widow maker, she don't care what you plan. Batty Natty got a wicked little wiggle, she'll steal the shirt off your hands. Oh, Batty Natty, don't you break my heart. A fool with a margin star.